Welcome to an exhilarating review of the golden performance that rocked 2023. The year witnessed a remarkable surge in gold, outshining commodities, bonds, and even most stock markets. The glitter of gold was not a fleeting glimmer, but a steady beacon amidst the financial tumult of the year. The global economy demonstrated an impressive resilience, standing firm in the face of potential recession fears. As the world grappled with heightened geopolitical tensions and continued central bank buying, gold remained a steadfast and reliable asset. It was a year where gold wasn't just a precious metal, but a testament to economic fortitude. The labour market and various indicators hinted at a moderate to significant chance of a recession, yet the gold market continued to thrive. Gold truly glittered in 2023, but what does the future hold? Stay tuned. As we gaze into the crystal ball of 2024, the consensus points to a soft landing for gold. But what exactly does a soft landing mean, especially in the context of gold? In economic parlance, a soft landing refers to a situation where an economy slows down, but not drastically enough to trigger a recession. It's a controlled slowdown, a deceleration of growth, and not a crash landing. Historically, soft landings have not been particularly attractive for gold. Why, you ask? Because gold thrives in uncertainty. When economies are doing well, investors usually opt for assets that offer a higher return, like stocks and bonds. In a soft landing scenario, the economy is still growing, albeit at a slower pace. This stability doesn't provide the kind of uncertainty gold needs to shine. However, 2024 might just throw us a curveball. Two factors could provide a much-needed support for gold: continued central bank buying and heightened geopolitical tensions. Central banks worldwide have been stocking up on gold, seeing it as a safe asset in uncertain times. This continued buying could provide a floor for gold prices. On the other hand, geopolitical tensions are like a wild card. They introduce uncertainty into the global economy. When tensions rise, investors tend to flock towards safe havens, and gold has always been seen as one. So, while a soft landing might not seem like the ideal runway for gold, it's not all gloom and doom. With central banks continuing to buy gold and geopolitical tensions keeping investors on their toes, gold could still eke out some gains. Although a soft landing may not seem ideal, it could still see gold make slight gains. The spectre of recession looms large. Will it cast its shadow over gold's future? As we turn the corner into 2024, the whispers of a potential recession grow louder. The global economy had shown resilience in the previous year, but the dark clouds of economic downturn cannot be entirely ignored. The labour market, an often reliable barometer of economic health, has been sending mixed signals. Some indicators suggest a moderate chance of a recession, while others point towards a more significant risk. The uncertainty in the labour market is mirrored in other economic indicators. The yields on government bonds, the performance of the stock market, and fluctuations in consumer confidence all contribute to the growing concern of a possible recession. But what does this mean for gold? Traditionally, in times of economic uncertainty, gold has been seen as a safe haven. Investors flock to the yellow metal, driving up its price. However, in a soft landing scenario, when the economy slows down but avoids a full-blown recession, it's not clear how gold will fare. Gold's performance in the upcoming year will be influenced by a complex web of factors. If inflation cools more quickly than interest rates, real interest rates will stay elevated, potentially constraining gold. On the other hand, if geopolitical tensions heighten or central banks continue their gold buying spree, these factors could provide support for gold. The threat of recession is real, and gold's fate is intertwined with it. As we delve deeper into 2024's outlook, let us discuss the unlikely no-landing scenario. This scenario, although considered improbable, paints a picture of a re-acceleration of both inflation and growth. Now you might ask, why is this seen as unlikely? Well, based on historical patterns and current economic indicators, such a scenario is a rarity. Typically, periods of accelerated growth are often followed by a slowdown or soft landing. However, let's entertain this no-landing scenario for a moment. Imagine a world where inflation and growth continue to climb together, a world where the economic engine refuses to decelerate. In this world, the value of gold could be influenced in fascinating ways. It could either soar in response to heightened inflation or fall due to a thriving economy that detracts investors from safe haven assets like gold. Despite its unlikelihood, the no-landing scenario presents an intriguing possibility for gold. Gold's performance doesn't exist in a vacuum. Let's uncover the factors at play. Our first suspect is GDP. If economies are growing, gold often takes a back seat. Next, inflation. When prices rise, gold shines as a safe haven. Interest rates too play a pivotal role. Higher rates can diminish gold's allure as they offer yield, which gold does not. The strength of the US dollar also sways gold's fortunes. A stronger dollar often means cheaper gold. Lastly, the unpredictable event risk. Political unrest, wars, or economic crises can trigger a gold rush. These factors will be the puppeteers pulling gold strings in 2024.